Good morning. Welcome to StockMarketFunding.com. This is a trade that SMF Pro Trading students have been involved in since last Thursday, new students. And what they have learned is they've learned a combination of understanding how to keep their appropriate stop and how to judge tops. And I'm going to go into the video now and I'm going to talk about that so that they are managing the market and not being controlled or managed by the market. And at SMF, Pro Trader is a pro trader, not a poop butt trader. And here's how it goes. On the morning, we started out, we broke through a pivot, we came up, we got above a pivot, they had short sells out, they were stopped with 8 pennies, they got hit at 139.70, or I'm sorry, yes, 135.97, 3 pennies. Then the stock drops right there off of their short down, and we took $1 out of the trade. Some people took 80 cents, some people got $1. The thing about it is that the indicator started to shoot all the way up here. That's the moving average convergence divergence. MACD bars, those. Then what happened is that when they got up to the top, their percent DS over here, right here, was at a peak. And at some points in time, as we were shooting up here, it got as high as 95. 91, 92, 93, 94, 93. And because you were so overbought on the intraday, that's where the resistance couldn't take out. And they kept very short stops, and at critical points above resistance, they were out immediately, and they got that short down to here. Now, what we're looking at is that this indicator, when you're back up doing a double top test right here, and if this indicator is descending, the 3-minute MACD on this chart is going down, that means that that top is weak. This top right here. So let's draw a little signal. This is a top, consolidation top. This top is another top, and it's a V shape where it comes back up, but then we look for it to roll over to the left here now. And that means that as long as they know that this is descending, that resistance level is very, very strong. The other thing they're going to learn is that if we to pull back on this and we stop going down, that means that this top right here that I'm showing, that this consolidation, if this doesn't continue to go down, that means that this consolidation at this time has momentum. And it would be very easy for them to know that the top is weak if you're descending this way intraday. We shorted that down. We did a lower, that means that this little reversal here and where we're at in the move is weaker, people. And the thing about it is that if we keep declining this way, that means that this high here is lower than your first high. High 1, lower high number 2, and this consolidation resistance right here is weaker. And see that this top, as long as this is going down, that means that this top versus top 1, top number 2, if this continues to go down, that means that the trend is weaker in the intraday cycle. So what I want traders to understand is if this stops going down and holds, that means that this bottom support has got a lot of leg to it. And if we start to turn back up with this indicator here, that means that we could go up and break that high if that was to happen. But we're still declining here, which makes this consolidation at resistance. That means this is high, This is it. Watch. Let me take out some of these other trend lines. There's the reversal we got. There's the V shape. There's the down bar. But here's the most important thing. This resistance across there, with that declining, is why you're not breaking higher. Over here at the top, you were peaking, then you started to decline, and that's why you couldn't break the intraday high through resistance. You had peaked in the cycle, and you had peaked in your other indicators, and you got that down bar, and then you got half of the pro trader bar support right here, and you came up, and that high is lower. So now the trend is weaker. If this keeps going, that means we could break lower. So I want traders to understand that this part of that consolidation there versus number one was where the peak was across resistance, and you couldn't break up through here. You couldn't break. See, you couldn't break because you'd peaked and you'd gotten overbought. You had at one time 95 up here, and you'd stayed overbought during that time frame. Couldn't break. Now, because of the declining MACD here, you're not breaking the high. You're not breaking up. See, you're not breaking. You're not breaking higher. You're not breaking higher. See that? You're not breaking higher. See that? You're not breaking higher. See that? You're not breaking higher. Why? Because this is declining. That means that the lower high reversal, that this high here is lower than that high. There are two characteristics. This was the peak, then the decline. That's what that was about, why it couldn't break it. This here is lower, and it keeps descending, and even after the bounce, after the pullback, the bounce that you can't break up here. You can't. And it's because this is declining, and you've been given a gift.